Silver has turned into a casino, gold is the real safe haven, but sophisticated players are already watching platinum. Gold and silver keep hitting new highs. But take note, big money is quietly heading for the exits. This week also brings the Federal Reserve's policy decision, key inflation data, and the risk of another U.S. government shutdown on January 30th. How should investors trade metals from here? Today, Ultima Markets lays it all out clearly. Just by looking at the economic calendar, it's obvious that volatility this week will be anything but small. First, this is a genuine super macro week, with the Fed's interest rate decision, PCE, and PPI data coming in rapid succession. Second, and more dangerously, the U.S. government is once again facing a potential shutdown on January 30th. You may still remember last November's record-long shutdown. Although Congress later pushed through a temporary funding patch to keep things running until the end of this month, that money is about to run out again. If lawmakers fail to reach an agreement this week, around 75% of U.S. federal agencies, including the Department of Defense, could be forced to shut down or limit operations. While some bills are currently progressing, as long as nothing has been signed into law, the potential for safe haven trades remains firmly on the market's radar. However, if you're thinking of blindly chasing prices higher right now, you need to hear the following horror story first. Previously, investors rushed into silver because of fears that Trump might impose critical minerals tariffs, prompting massive shipments into the U.S. and a buildup of domestic inventories. But this week brought a false alarm. The results of the so-called U.S. Section 232 investigation were released, and no immediate tariffs were imposed. Instead, a 180-day negotiation period was granted. It's like thinking the city is going into lockdown tomorrow, rushing to the supermarket to stockpile food overnight, only to be told the next day, no lockdown for now, we'll review it again in 6 months. So what happens next? The silver previously stockpiled in U.S. warehouses may start flowing back out, returning to London or other markets. The short squeeze narrative that had fueled silver's surge suddenly looks far less convincing in the short term. Even before the tariff news became official, Wall Street hedge funds had already cut their net long positions in silver by 15%, pushing them down to their lowest level in 22 months. Put simply, smart money judged the risk to be too high and got out early. And on the other side, retail investors are still buying aggressively. The largest silver ETF has recorded net inflows for 169 consecutive days. Institutions are retreating, while retail traders step in to take their place. This kind of divergence is usually a clear signal of elevated volatility. It shows that the silver market is currently extremely unstable. Even a small trigger could cause sharp rises or sudden crashes. So what should investors do now? Ultima Markets offers 2 key conclusions. First, do not treat silver as a defensive asset. Right now, silver is effectively a casino. Although tight inventories and delivery month squeeze dynamics are still in play, meaning prices could push higher, the loss of tariff-driven momentum removes its biggest short-term catalyst. If a correction occurs, silver could fall far more sharply than gold. If you're risk-averse or unable to track capital flows, it's best to stay away in the short term or treat silver like buying a lottery ticket. Second, gold remains the true hard currency. Compared with silver's violent swings, gold's logic is far cleaner. Its rise isn't driven by short-lived tariff rumors, but by concerns over weakening U.S. dollar credibility, pressure on the Fed's independence, and the looming risk of a government shutdown on January 30th. Gold may also be trading near highs, but it is far more resilient on the downside. Finally, a word for aggressive traders: keep an eye on platinum. On Ultima Markets MT5, you can search directly for the CODEX test. On the daily chart, platinum is currently forming a converging triangle consolidation pattern. Platinum's inventory dynamics are similar to silver's, and its major producers, South Africa and Russia, have even more strained relations with the US. This increases the likelihood of future disruptions, potentially more so than gold or silver, though this is very much a game for advanced players. In summary, on the macro level, there's the risk of a government shutdown. On the micro level, there's the danger of institutional capital withdrawing. If you want safety, choose gold. If you want high risk, look at silver. But never mistake luck for skill. Volatility this week is likely to be intense, so fasten your seatbelts. This is Ultima Markets. Follow us, and see you next time.